Brad Wright joins us from the newsroom. He is the Director of Financial Planning at New England Financial Planning Group. Brad, I think the big question is, should we be concerned about this?
Right, that's the big question. The way we look at it is there's always something, right? Whether it's the threat of a slowdown in the economy, whether it's a tweet, or in this case, whether it's the coronavirus, which is a serious health issue. But should you worry at this point? Should you panic at this point? No, absolutely not. From our viewpoint, you should be invested for the long term as opposed to, day-to-day trading. And if you've done that properly and you've assessed your risk and you're invested according to your risk tolerance, you should be able to weather a day or two or even three of something like this going on.
So, Brad, what does this mean for the average 401k?
Actually, it may be good news if you have a 401k, because you're typically investing every pay period into your 401k. So if you invested today, you got a bargain. You bought low, and then you ended up getting more shares from that. And as things turn around and as the market rises, you end up making a little bit more money that way.
So if people are getting bargains now, do you see this continuing? If it continues to spread, if more cases appear, could this be trouble in the long run?
Well, so two things. Could it continue? Yes, it could continue. We like to think we can forecast what's going to happen. The economy's good, unemployment's low, things like that are positive for the economy, and then something like this shows up out of the blue and throws everything a little bit off kilter. So could it continue? Yes, but keep in mind, yes, it was a big drop today, but we came down from a really high high. We were at record highs in the past couple of weeks, so that we're down now. I'm not too concerned yet.
Oh, yeah, but Brad, 1,000 points down, that gets people's attention, no?
It does. It does absolutely get people's attention. And as I said, things you can do, you can look to, put more in at this point. You could look at something like harvesting the losses, which means sell at a low, and which would offset your gains later on in the year too. I think something people don't understand is that typically, the majority of times where the year ends up positive, so December 31st, you look back on a positive year, at some point during the year, the market went negative. You didn't end up negative, but it went negative at some point, and maybe this is that point.
Brad Wright, thank you so much for your expertise joining us live from the newsroom.
Good advice.